Hello everyone, and welcome to this presentation of how to identify quick moves before they happen. Welcome once again. My name is Primo. I am the president and founder of Specialist Trading. I see we have a lot of people from around the world. We have some students from India joining us, some people from Europe as well as the United States. Thank you so much for attending. Now today we're giving a special rebroadcast of a webinar we did a little over a month ago. We've had such interest, and so many people have emailed us about this particular webinar that we're representing it again with some new slides added towards the end. So this is a great informational presentation today, and I hope you enjoy it because I'm going to give you a lot of great information that you can begin to use. Now before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using these techniques, but please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So take a moment to view our disclaimer. Also, once again, for those people who are new to my presentations, please wait till the end of the class to ask any questions. I know a lot of you go to other webinars where you get to ask and interact within the webinar. I'm kind of old school. I like to do things a little differently, like a classroom where you wait till the very end to ask any questions. So if you happen to have a question, write it down and try to remember it, and we'll get to it in about the last 10 or 15 minutes of today's class. Also, for those of you who haven't joined us yet, I want to invite all of you to follow us on Twitter. That's our handle there, at SPCLSTTRADG. We've posted some really nice signals that we got in with our members after we've gotten in. We don't tell you exactly when we're getting in, but we usually tell you the day after all of our members got a buy or a sell signal. In fact, we've had a really nice run-up up until the last couple of days ago in the market, and we've had a nice week or two of going straight up in the Dow and in the index futures, and we posted a really great buy signal right at the very bottom of that run-up. As well, we post other markets. We posted about 3 days ago some great sell signals in the euro dollar and in the euro yen. And so with those combined two signals, we have over roughly about 200 pip gain in both of those combined. So we post some great information, some general financial wisdom, as well as some signals. And so feel free to follow us on Twitter. Okay, so for those of you, once again, who are new to my presentations, we have a different type of philosophy at Specialist Trading. We are really an educational website rather than just rely on you having to come to our website and blindly take the signals or just you know, see what we're doing today so you can follow us and track whatever we're doing. We really feel that that's a recipe for disaster if you really want to learn and have any type of consistency in your trading. The only way, in my opinion, to get consistent so that you can be trading 10, 20, 30 years down the road is to make yourself a part of the process. That means that you have to have a very valid say into all of your trading decisions. We don't just want you to go to a chat room or a trading room or listen to some guy on TV. Whatever he says, that's what you want to do. We've seen that over time that really doesn't work, and that ultimately you don't really understand what you're doing. You're just trying to mimic someone who has told you that you know, his strategy or his system works. What we do at Specialist Trading is provide you with the tools and the information and the strategies, and then we help you refine them to meet your needs so that you can either trade them aggressively or conservatively, anything that meets your needs with all the input and all the knowledge and tips that I've accumulated in my 37 years so that you feel comfortable with these golden nuggets that have stood the test of time. And so today I'm going to share with you a lot of these things that I've accumulated and show you exactly how you can get on that road to consistency. So rather, once again, than just provide you with signals for you to blindly take with no reason why you're doing it, my goal is to teach you how to trade with the specialist edge so that you can ultimately rely on yourself for any trading decisions, so that you can empower your trading and become a part of the process so that you don't have to rely on an outside source to tell you what to do. That's the specialist edge, and it's really rooted in simplicity. The things I'm going to share with you today are extremely, extremely simple, and you'll see how simple they are in just a few moments. All right, so here's what you're going to learn today. And remember, for those of you who may have just come into the room, remember, we will take any questions you have, but please wait till the end of the class, okay? I won't even open up our question and answer box there. So if you have a question, just write it down or try to remember it and then ask it at the very end, okay? All right, here's what we're going to cover today, and here's what you'll learn. I'm going to share with you two identifying techniques that you can start using as early as tomorrow. These are extremely, extremely simple, but I'm going to show you how powerful they are for helping you get in sync with the market, whatever market you're trading, whatever time frame. And then we're going to see how these two techniques make up one of our most consistent strategies, which is strategy number 4. And that strategy can apply to trading stocks, trading the E-mini, or trading the currency pairs. Lastly, we're going to add a short-term trend identifier. This is a proprietary tool for the members of Specialist Trading who join our course. And this is a great proprietary tool, and we're going to see that when we combine this short-term trend identifier with strategy number 4, how it makes for an extremely powerful combination. And you're going to see how we get some really high-level signals here with these two things combined. All right, so let's go with technique number 1. Remember, if you have any questions, just wait till the end of the class. Technique number 1 has to do with how to properly identify trend. Now, I know everyone says, well, yes, I learned that many years ago. I know you have to be in sync with the trend. So this is nothing new. You're right, it is nothing new, and most traders know that you should be in sync with the trend to get these high probability signals. The only trouble is, how do you determine what the trend is? There are 1,000,001 ways for discerning what the trend is. You go to one educator, he'll tell you one thing, another educator will tell you something else. For example, let's look at this generic chart here. We see here, if someone just looked at this, a static generic chart, they'd say, well, Steve, there is no trend. We're kind of going sideways or in a ranging market. We're going down, then back up. Okay, so there's really no trend. Well, not according to the way we find out what trend is at Specialist Trading. See, we use a proprietary tool, which is our buy and sell line. And all the buy and sell line is, if we're looking to see what the trend is a 50-period simple moving average. That's the buy-sell line. And what we do is we plot that no matter if this is a 5-minute chart, if it were a monthly chart, or a daily chart. We should always have a 50-period simple moving average plotted, and we ask ourselves, where is price in relation to that 50 period? And if the majority of price or the closings are above that, then the overall trend is up. That's how simple it is. All right, we're looking for the overall trend, and that's how easy it is. Remember, I told you that trading does not have to be complicated. The Specialist Edge is rooted in simplicity. So this is a great tool for finding out what the overall trend is. This works the same way if you're looking to the downside. Someone looking off this at face value would say, well, Steve, there's no trend once again. We're kind of just in a range, so I'm going to just stay out of this market. Well, that's not true, because if we add our 50-period simple moving average, we ask ourselves, where is price in relation to that? Obviously, price is below. So this means that the overall trend is down. If the overall trend is down, this means we're only looking to go short. Conversely, in the other chart we looked at, if the overall trend is up, it means we're only looking to go long. So it's that simple. If price is below the 50, such as it is right here, we will never, ever look for a buy signal. I don't care how strong or what somebody says on TV or how it's holding up some support. I don't care. We're only going to generate sell signals if we're below the 50. Over time, you will see that this will give you that consistency. I can almost guarantee you that you will right now go back and look for examples and say, well, Steve, this didn't work here. I had a great signal. I could have bought, but I didn't do it because it was below the 50. You will see exceptions to the rule, but we're looking for consistency in our trading. And over time, this one simple rule will work in your favor to get you consistent. We're not concerned about picking bottoms or tops. We're concerned about having consistency in our trading plan so that we can be trading 20, 30, 40 years down the road. That's our goal. We're not concerned with hitting a home run because we know we can easily lose that. All right, so I'm sure you're going to say, well, how powerful is this tool then if we're supposed to apply this all the time? Well, let's look at some current charts. Here's a current chart of Twitter that was taken up until like a week ago. Now, someone trading Twitter right now would say, if they're trying to pick a bottom or go long this stock, they would say, boy, I've been getting killed. I can't make any money trying to buy this. It just keeps going lower and lower. Well, if you use the simple rule we just taught you, we ask ourselves, where is price in relation to that? And you would have seen going back all the way back to February that Twitter was below its 50-period moving average. So there was no reason to even consider buying Twitter. And there still is no reason. Even though it's rallied a bit since we took this snapshot last week, there's no reason to buy Twitter. Okay? We're only going to be looking for shorting opportunities. How about this chart of the S&P index? Okay, now someone looking at this would say, well, it looks like we're topping out. In fact, we've been coming down. This is a chart that was taken up to about midday today. And someone would say, well, we were really topping out here. We're rolling over. It looks like we're going to get a big sell-off, and I think the market just topped out. If we add the 50-period simple moving average to the S&P index, we see that price is well above. So we're not going to even consider, we will have no shorting at all in the S&P index until we see it well below the 50-period simple moving average. Okay, so from now on, all we're looking for are buy signals. And in fact, I'm sure we have a number of buy signals generated today because of the way the market acted. All right, so that was technique number one. Now we know how to be in sync with the trend, what the overall trend should be. What is technique number two? Well, we want to look for a bar that closes either in the top or bottom 25% of its range. Why are we looking for this? What's so important about a bar closing in the top or bottom quarter of its range? Well, whatever time frame we're looking at, whether it's a 5-minute bar or a monthly bar, closes at these extreme ranges, it's the market itself giving us a clue as to which direction it most likely wants to continue. So if it closes at the very top of its range, most likely we are going to continue in that direction for the next 1 to 5 bars. Now these could be 5-minute bars, these could be daily bars, monthly bars. It doesn't matter. This is a fantastic edge to have. Now when you add this in sync with the 50-period simple moving average, you really have a boost in your ability to be consistent as a trader. So let's look at this example. Once again, we know we are above the 50-period simple moving average, so therefore we're only looking to go long. This means we're looking for bars that close in the top quarter of their range from top to bottom, and that would be these 2 bars here. So if you see on this very first example, colored in green, we see that we went up for the next 5 bars. Not a lot, but we still went up, so it was telling us the momentum was still going higher. And on this second example we see here on the far right, we closed in the top quarter of its range, and that one really took off. All because the market gave us this clue it had closed in the top portion of its range. Now if we look at the other example we talked about, we're below the 50-period simple moving average, so we're only going to be looking for bars that close in the bottom quarter of their range, such as this bar right here. And as you can see, look at the clue that the market gave us. Okay, now does this work 100% of the time? No, nothing works 100% of the time. But we're looking for edges to get us in sync and give us those high probability signals. And these are 2 great edges that you can use. They're not a full-fledged strategy, but you can use them and add upon any strategy you're currently using, or you can build a strategy based off of these 2 techniques. Now what we did was we built a strategy. This is when I say we, this was given to me by my mentors on the floor some 30 years ago, and I call this strategy number 4. This is one of our most consistent strategies and probably our most popular strategy to date because it transfers over onto any market in any time frame. The best thing about this is that once you learn the rules, you can go to any market you like and trade it. It doesn't matter that, well, this is only used for the E-mini, or we can only use this for stocks, or I'm a day trader, I can't use this for day trading. You can use it for anything. That's how easy it is to transpose onto any market. So let me give you some of the highlights about this. It's for all traders, from beginners to advanced. In fact, this strategy is traded in over 60 countries around the world, people who have purchased this strategy. And these are traders anywhere from hedge fund managers to people who have been trading for just a couple of weeks. It's the exact same rules no matter how long or how short you've been trading. Now, it's for traders looking to catch quick momentum moves. This is the basic format of strategy number 4. Although in the course, if you want to stay in the trade much longer, we show you how to do that. Now, if we judge the intensity level, meaning from the most intense to the least intense, it's right in the middle. It's at a level 2, meaning that it's not something where you have to constantly monitor and you can't walk away from your computer, but at the same time, it's also not a strategy where you just enter an order and just walk away. It's basically right in the middle. It's a very comfortable strategy to trade. It only uses one indicator, and normally I wouldn't give that indicator away, but I already gave it to you. It's the 50-period simple moving average. That's the only indicator we look at, okay? Now this works in any time frame, any direction, and any market. But remember, our edge here is consistency. I'm not going to sit here and tell you that this, generates gains of 1,000% a year. We don't keep records like that because it's a strategy. It's not a system. There are a number of different ways to trade this depending on what type of trader you are. But regardless if you're a conservative trader or an aggressive trader, the main thing is it gets you on that road to consistency. And that, once again, is the only thing we're searching for. We're searching for consistency because consistency is the only thing that will sustain you in your trading. Any trading strategy or system can knock out tremendous numbers, but they can also give away those numbers and lose everything the next year. We're not concerned with trading methods like that. We're more concerned with methods that have a two-step forward, one-step back approach so that you have this nice stair step in your equity. All right, let's look at some older examples right now. We're going to share with you some older examples for educational purposes just so that you can understand how these two techniques work combined with strategy number 4. We'll start off with stocks. And once again, I know some people may have joined us a little bit later. If you do happen to have any questions, please remember to ask them or hold up till the end, okay? And then we can go over each and every one of them, okay? Thank you. All right, so let's look at some stock examples. Start out here with HAL, H-A-L. We see here where price is. It's above the 50-period simple moving average. And here is a bar that closed in its top quarter. Remember, when we say the top 25% of its range, all we want to do is see where the top is and where the bottom is. So that should be some range. Let's say, just to make things easy, this is 4 points altogether. Well, the top point, in other words, if you divided this bar by 4 separate but equal markings, the top quarter would be the top 25%. So we closed in the top 25% here. That's all we're looking for. It doesn't matter if this is a candlestick chart, or it doesn't matter if it's an open, high, low, close chart the way you see. All we're doing is taking the extreme high, the range of the day, and the extreme low range of the day, and that's our range, and we're just dividing it by 4. We want to close in that top quarter. Why? Because we are above the 50-period simple moving average. So this was an actual strategy number 4 signal that was generated. If you were a member of the course, you would have gotten a little add-on which tells you when a buy or sell signal is generated, gives you an arrow telling you when to buy and when to sell. And look what happened. You see how momentum continued in that direction. How about Twitter? Now this is actually taken from this past couple of months. We just showed you that chart in Twitter where we were below the 50-period simple moving average. So therefore, the only signals we were going to be taking are on the short side. We wouldn't even consider going long any signals in Twitter. So a sell signal was generated here at the beginning of March. So as you see there, we closed in the bottom 25% of its range. And look what happened after that. Okay? Now, obviously, you don't have to stay in the trade that long. You can get out much quicker than that. And we show you different ways and different exit points at which you can take in the course. Now, that was a nice trade all the way up until the middle of April. As we see here, we had a nice little rally, and then another signal was generated at the end of April, beginning of May, and look what happened, okay? And then as we rallied, we had one more signal generated right coming into June, and we've already gone down about 5 points since then. So you see how when you're in sync with the market, you know, there's no way that you're going to be trying to pick bottoms and pick tops. We're going to be just trading with, even though it looks like we picked the top right here, it's just basically a pullback or some type of consolidation before we head lower. Now this, I believe Twitter has gone back up higher, but using our money management rules, which we explain in the course, you could have protected yourself to taking a small profit or at the very least broken even on that last trade. How about COP? Once again, we are above the 50-period simple moving average, so an automatic buy signal was generated. We closed in the top 25%, and look what happened after that. You see, the market, whatever you're trading, whatever time frame you're trading, is always trying to give us clues as to what it wants to do. It's always trying to tell us, this is what most likely direction I'm going to be going in. Do you want to come on board? And if you learn how to listen to the market, there's no reason to listen to some chat room or some trading room. There's no reason to subscribe to some service where you're paying each and every month exorbitant amounts of fees so that you can find out what they're doing. There's no reason to be always monitoring what's on TV or in the internet to tell you what to trade. Remember, the key to trading consistency is to make yourself a part of the process and not relying on outside sources. So once we teach you how to do this in our courses, there's no real reason that you have to stick around specialist trading. We don't, ask you to give us more fees and more funds unless you want to purchase other courses. But once you purchase a course, it's yours for life, and you're a member for life, and you can come and go as you please if you want to tune up or if you want to learn some more information. Here's TGT. Now, as we can see, for all intents and purposes, we are below the 50-period simple moving average, and we have 2 bars here closing in the bottom 25%, the bottom quarter of their range. So we have double signals here. That's a very strong indication that most likely we're going lower, and look what happened. Okay? Once again, we didn't worry about what some fundamental news was telling us. We didn't listen to any chat room or trading room. We just listened to the market, and it automatically told us it's going lower. How about the E-mini? Same thing will work in different time frames. This is a 1,000 tick bar chart. These first 2 signals were generated to go short because we were below the 50 period. Now here is an example especially our new students have difficulty with. They'll say, well, Steve, we're above the 50 here, but remember, we're going to be entering, we closed below the 50 period. Even if we closed a tick below, that's still a valid aggressive signal, so you could have taken that. If you're more conservative, then you would have taken this one here. Now, once we switched trend and started to go higher and we had consistent closes above the 50, well, now we're only looking to go long. We're not even going to consider going short. And look at all of these buy signals that were generated while we were going up on a 1,000 tick bar chart. If you trade a 5-minute chart, we see here that we're below the 50 period moving average, and on this day that was going lower, look at all the sell signals that were generated to go short. I believe we only would have had one here that would have been stopped out, and that's this one right here. Because you would have gotten short and been stopped out, but you could have gotten right back in and made those gains right back. So, as we said, this is not something that works 100% of the time. You will get losses from time to time, but they're minor, and because it's so consistent, you'll be able to make it back quickly. Here's another 5-minute chart of the E-mini. Now, as you can see here, at first our trend was up. We don't have the 50 period plotted, but our trend was up. Here's the buy signal generated, and you have a nice 5 or so points to the upside. But once the trend changed and the software generated sell signals, we see here that we could have taken advantage of these nice moves to the downside. How about a 60-minute chart of the E-mini? Well, we're kind of hugging that 50 period simple moving average line, but now we have a signal generated that closes below the 50. So this is an aggressive trade to go short on an hourly basis, and look what happened. Okay. Now this same principle, the same rules apply to the Forex market. Here's a daily chart of the euro dollar. As you can see here, these are all valid buy signals that were all generated, and all of our members who take the Forex courses could have seen these automatically been generated and taken these signals. The Australian dollar at this time period was below its 50 period simple moving average, so the only thing that was generated were sell signals. We were not in any way going to try and pick a bottom in the Australian dollar, and had we tried to pick a bottom, we would have probably given back all of the gains we made on probably our first sell trade here, trying to say, well, this trading room I went to says that we should buy the Australian dollar, and had we tried to buy it, we probably would have given eventually everything back. Here's the euro yen. Once again, you can look at these charts either through candlestick or you can look at them through open, high, low, close. The software will still generate a buy or sell signal as it did right here. Why? Because we closed in the top quarter. If you take the very top of the wick to the bottom of the wick, you just want to close in the top 25%. As you can see here, we went right up for the next 3 days after that. Now, I want to show you something that will happen from time to time because, as I said, this is not a strategy that produces thousands of % wins each year. It's not something that we guarantee that every trade is going to be a winner. We're just trying to get on that consistency level. Now, let's say you purchase strategy number 4 and you're all excited. You get a signal here and a daily bar chart of SNDK. So you go, boy, this is great. I'm going to take this signal. I can't wait. I've studied everything. I've studied the material. I know where to put my entry, where to put my exit, my stop placement. Everything's ready, and you get into the trade, and guess what? First trade right off the bat is a loser. At this point, you're probably kicking your computer and saying, boy, last time I go to Steve Primo's webinar, this stuff doesn't work. And so you stay out, but you continue to monitor it, and then later on you get a buy signal in the same stock, SNDK. But you're so discouraged now, you don't take it, and then look what happens. Okay, it goes straight up. Does it look familiar at all? I'm sure a lot of people are always telling me, I get emails where, Steve, I seem to take the ones that don't work, and then the ones that do work fantastically, I don't get into. This is a very common problem because once you get a small loss or so, you get a little bit discouraged. So how can we increase our odds for success? So how can we, is there any way to filter out these losing trades? Well, we can't do it 100%, but we found a great technique in which we can filter out some of those losing trades. And this is by adding the PET-D, or the Primo Early Trend Detector. And what that is a proprietary color bar algorithm. We can't divulge what the rules are. What it's based off of is simply momentum. But it's a great, great tool that simply tells you what the short-term trend is. So in other words, if you see a series of green bars, consistency in green bars, this is telling you that the short-term trend is up. Remember, when we looked at the 50-period simple moving average, that was telling us the overall trend. But now, the PET-D is telling us the short-term trend. Conversely, if we see a series of red bars, well, then the short-term trend is now down. Whereas where price was below the 50-period simple moving average, well, that's telling us the overall trend. but now we can also find the short-term trend. So how can we use all these things in conjunction to better our chances for success? Well, here's what we do for buys. We only take the strategy number 4 signals, the buy signals, that are colored green, okay? Because this is giving us confirmation from the PET D telling us that the short-term trend is up. So we only want to take signals that are buy signals in the strategy number 4 course that are colored green. So as you see here, if we go back to that SNDK example, the 2 examples, all right, well, we didn't take this one, and this one went straight up, but this is the one we took, and it went straight down. How could we have avoided that losing trade? Well, if we look here, we see that on this signal, once we've added the PET D, what color is it? It's red. And we only want to take buy signals that are colored green. So we would not have taken this trade. If we wanted to use the PET D with this, we'd simply say we're not going to take it, and guess what? We would have sidestepped this losing trade. Then when this signal came up a couple of weeks later, we would have seen that the PET D colored it green. Therefore, we would have taken this signal, and guess what? We would have had a nice gain. So we would have totally sidestepped that losing trade, and we would have gotten into the winning trade. Now, this is a really high probability tool to add on. It doesn't work 100% of the time, but it will increase your odds for success. So how do we use it for sells? Well, if you get a signal to go short, strategy number 4, only take the signals that are colored red. All right, so let's look at this example in ROST. Obviously, we're below the 50-period simple moving average, and we have 4 automatically generated sell signals with strategy number 4. Now, we haven't added the PET D yet, but we see here right off the bat that the first 3 didn't work. In fact, you most likely would have been stopped out on these first 3 signals. Now we have a 4th signal, and by this time you're saying, boy, I don't think I'm going to take this because it's ridiculous. I've already gotten stopped out with 3 minor losses, but how do I know this is not going to add up to another loss? Well, if we want to increase our odds of success, we simply add the PET D, and if we're going short, we can only go short if the bars are colored red. Well, we see here that the first 3 signals were all colored green. So this means we would have never taken these trades. We would have sidestepped them altogether, and we would have not have been stopped out on any of them. But the last signal is colored red, so therefore the PET D is confirming that the short-term trend has now changed to down, so you would have taken this signal, and look what happened. Okay? You see how simple it is? When we add the PET D, we're putting the short-term trend in our favor. All right, so let's look at some other strategy number 4 and PET D examples combined. We look at CVX, we see here that we're kind of going sideways to lower, but at this point, the software generated a buy signal in CVX, strategy number 4. And guess what? The PET D at the same time colored it green. So this is a all signals go. It's confirmed that if we're using this technique combined, we can go long CVX. And look what happened. How about Facebook? Well, in this particular example, we had 2 buy signals, one right here and one right here. Now, in this first signal, it worked. It wasn't a great signal. It went up a little bit, not that much, but you still could have, at the very least, used our money management technique to break even on this particular trade. But the second signal was also a buy signal, and it's colored red, so you would not have taken this trade, and it was good that you didn't, because the short-term trend was down, and the PET D was warning you that there was no momentum in the short-term trend to go up. Later on, we had a sell signal with strategy number 4, that generated us to go short, and that was also generated red by the PET D, and it went lower. How about CRM? Where you have 2 buy signals generated by the software, but if you have the PET D, if you also have the PET D, you can see that you would not have taken these 2. Now this one worked a little bit. Once again, you most likely would have broken even. This one was also colored red, so you wouldn't have taken it, and it's good that you didn't because we went lower. Now later on, we had 2 valid signals to go short generated, both colored red, and both would have resulted in winning trades. Another signal in currency pairs. Here's a signal to go long the euro-yen. As you can see, it was colored green, so we would have taken this. It doesn't look like a lot, but that's over $1,000 gain just trading one lot. Now this one really didn't have any steam left, and the PET D is telling us that it's the short-term trend is down, so why would you take a buy signal if the short-term trend was going lower? So you wouldn't have taken that trade, and you most likely wouldn't have lost anything. Or the British pound on a weekly basis. We know a lot of people like to trade weekly bars. Well, these are all strategy number 4 signals to go long, and they're all colored green, so they're all valid. You see, strategy number 4 is a great strategy in and by itself. It's got this high level of consistency, but when you add the pet D to it, you've really increased your odds for success, and it makes for a much more powerful combination. Here's a 60-minute chart of the E-mini and this last month's trading here on the E-mini futures. We see here that we get a sell signal and it's colored red, so it's okay to go short that, and you would have made a nice profit roughly of about 15 points in 2 days, or 2 hours I should say, trading the E-mini. Later on we get another signal to go short, but what color is it? It's green. Now if we want to go short, the bar should be colored red, so you would have sidestepped this signal, and it's a good thing you did because most likely you would have been stopped out. Now later on you got a buy signal, and it was off to the races to the upside because it was colored green. Now let me show you some recent signals that happened within the last couple of weeks, and even what happened today using this powerful combination. Here's DTO. It's an ETF of oil, and as you can see, we are below the 50-period simple moving average, technique number 1, which I explained to you. We closed in the bottom 25% of its range, and the software automatically generated a sell signal. So this is telling us we have a valid signal to go short using strategy number 4. But we've also added the pet D, and the pet D is also confirming because it is red. So this was generated just last week, I believe on Thursday or Friday, and you can see we've gone down ever since. So this would have been a nice trade you could have taken in DTO, and this was just last week. Now if we look at SNDK, which was just 3 days ago, all the bars are colored green. So we know the trend is up on the short term, and on the overall we're way above the 50 period, so the overall trend is up. We have a close in the top 25%, and strategy number 4 meets all the other rules in this particular strategy. So we generated an automatic buy signal to go long. And the very next day, which was yesterday, we went up around 3 points in 1 day. Okay. Now we realize that the market went down today, but you could have taken a quick 3 points, or could have, depending on how many shares you had, could have exited part of those, or at the very least you would have broken even on this trade. How about today? This is a 2,000 tick bar chart of the E-mini. Now coming into this morning, we see here that we had a pullback down to the 50-period simple moving average, and the software generated an automatic buy signal using strategy number 4. This was on a 2,000 tick bar chart this morning. But guess what? We are not colored green. If we have a buy signal, we want to see that the bar is green, and the bar is red, so we didn't take that. And it's a good thing we didn't, because we went lower and we would have been stopped out on this trade. So we wait, and right after the opening, we see that we're below the 50 period. We automatically generated a signal to go short. So we would have taken this signal because the pet D verified it by coloring the bar red, and we made a quick point there. Okay, nothing fantastic, but you could have stayed in the trade or taken a quick point. And then moments later, we had another signal generated, and it was colored red this morning as well. Could have taken that and generated another quick point, or you could have stayed in the trade, and then another signal was generated to go short, meeting all the rules, and the bar was colored red, and another 2 points to the downside. And then lastly, around 7:30 this morning Pacific time, another signal was generated to go short, colored red, so it's a valid signal, and then now 5 points to the downside. So if you had taken and maxed out each one of these signals, you would have roughly taken anywhere from 9 points in the first hour of trading with no losers. You would have sidestepped that first loser, and this is on a 2,000 tick bar chart from trading this morning. Now we know that the market went even lower the remainder of the day. I just didn't have enough time to take some snapshots and try and trade and put together this presentation within that short period of time. But there are a number of more signals that were kept on being generated because the market kept going lower and lower. This just shows you the consistency of this, as well as the powerful addition of adding the pet D, so you know that you'll have the short-term trend in your favor. We can also look at an example. This is one of the trades that we posted the day after on Twitter in the euro-yen. We're obviously below the 50-period simple moving average, so there's no reason in the world we would even want to buy the euro-yen. We're just going to look for shorting opportunities. We had the software automatically generate a sell signal, a strategy number 4 sell signal. This was on the 9th. This was this Monday. And then we had the bar colored red because we added the pet D tool as well. So now we have a nice confirmation. All signals go to go short, and look what happened in the next 3 days. Okay, this is over 100 pips in about 3 days. That's over $1,000 just trading one lot or one contract. Okay, so let's recap. We've gone through a ton of examples in different markets, in different time frames, in different directions. we explained the two identifying techniques to get you in sync, to tell you what's going to happen with the market most likely before it happens. The first one is by plotting a 50-period simple moving average. You see that I plotted it on a 2,000 tick bar chart. I plotted it on a weekly chart. It does not matter. I plotted it on currency pairs. I plotted it on stocks, on the E-mini. So it does not matter what market you're looking at, but you should always have a 50-period simple moving average plotted. And what do? You ask yourselves, where is price, the majority of price, in relation to that? If price is above, the overall trend is up, and we're not going to consider going short. If price is below, the overall trend is down, and we're not going to consider going long. We're just going to look for shorting signals. Over time, you will really get in sync with the market, and you'll have this consistency in your trading just by using that one technique. The other technique is, while we're in sync with the overall trend, look for bars that either close in the top 25 or bottom 25% of their range. Why are we looking for those? Because the market is giving you a clue, an extremely powerful clue, as to most likely what it's going to do for the next 5 bars. Isn't that a great edge to know what the market may be doing for the next 5 bars, regardless of what time frame? Now, we took these two edges, which I just shared with you today and revealed, and we also came up with some other proprietary rules, and we put together strategy number 4. I've been trading this for over 30 years. It's a great strategy. It has a high level of consistency, but once we add our short-term trend identifier, the PET-D, you see how powerful it is, because the PET-D can use that as a validator to see that it's confirmed. Okay? So it's a powerful combination when you add all of these things together. You're putting the odds in your favor. Now, I want to invite each and every one of you to take advantage of this 2-for-1 attendee special we're offering you today. This is why most people wrote us and said, can you please send us that email again, or that presentation about that 2-for-1 special, because I really want to take advantage of it. And as you know, we give different webinars each week where we give different specials on all of our different programs. So we're offering this again, this 2-for-1 attendee special, where you get both strategy number 4 as well as the PET-D tool together. Now, this graphic here says E-mini strategy number 4, but trust me, it works for everything. We originally had this just for the E-minis, but we see that it works on anything. So it's not just an E-mini strategy. It's a virtually every market strategy. And so when you combine that with the PET-D, you'll see you get this real high level of consistency. You get instant course access, detailed instruction, up to 5 videos. We teach you all the entries, all the exits, and all the stops. We really didn't cover that today because it wouldn't be fair to go into that for people who've already spent thousands of dollars purchasing these, and then for me just to give it away for free. We also provide you with signal alerts, weekly video trading lessons. And remember, this includes both add-ons. In other words, you'll get the automatic buy and sell arrows for strategy number 4, as well as the color coding for PET-D, so your bars will turn either red or green. Now, one thing I want to explain, you don't just have to use them in this way. A strategy number 4 you can trade on its own if you like, and you can also use the PET-D on its own as well. Remember, the PET-D is really not a trading system or a strategy, it's a trend identifier. And let me show you how you can also use it for long term. If we go back roughly about 20 years, this is a monthly chart of the S&P index. Okay, and we see we had these tremendous swings where we went straight up, straight down, straight up, straight down. This was, these were all crashes. This was the internet bubble, and this was the banking crisis. And this is where we bottomed out, and we continue to go higher and higher. Now, wouldn't you love to have a tool to tell you when you should be long, when we're going up in these nice extended stages here, and when things turn around, when you should be getting out? Well, we applied the PET-D to these monthly bars, and look what happened. When we were going up, all of the bars remained green, and then when we got 2 or 3 red bars, this was our signal to get out. So you could have exited all this great sell-off here in early 2000 and missed all this downward movement. Once we had 2 or 3 consecutive green bars, you could have entered back into the market, and you could have taken advantage of this new rally to the upside, this new bull market. Here in 2007, 2008, when the financial crisis hit again, you could have exited the market and missed all of this sell-off, and then gotten back into the markets here and ridden it all the way back up. Now we have a little splash of reds here and there, but remember, you need anywhere from 3 to 4 consistent colors to tell you what direction you should be going. So you would have remained in the market this entire time, and you're still in the market until we have 3 or 4 red bars that will occur. So this is a great tool. Once again, you can use it on its own for any strategy, for any way you'd like to trade it, or you can combine it with one of our strategies, such as strategy number 4. We're combining these two great powerful tools together, a 2-for-1 attendee special once again, and we're discounting it down from $19.95 down to $14.95, where you get both of these great tools. Now, we know that $14.95 still may be a little expensive for some people, so we have payment plans available. We have a number of people who have thanked us for making these available where they wouldn't be able to access these unless we had a payment plan. So you can work with our trading consultants and figure out some type of monthly way to pay, and then you can have these up and running right away on a small monthly budget plan. So we urge you to take advantage. If you really want to take your trading to the next level, we're only going to be running this for the next couple of days, and then next week we'll go into another promotion with another strategy of ours and another technique. Now let me just give you the information in which you can contact us. Pro Trader Strategies is our sister site. They monitor and promote all of our individual strategies and combinations, so you can go to their website. And if you want to contact any of the trading consultants, you can email them at trading@protraderstrategies.com, as you see here. Or you can call them directly at area code 310-598-6677, and they'll set you up right away with that special combo deal so that you can get that really discounted price. Remember, these are two great things that I use in my trading each and every day. I was using both of these today for my personal trading, and as you know, the market was down all day, so the only trades I took were short trades, and we had some really nice ones. I think I made, for the short time I was able to trade, I believe I made about 5 points on the E-mini. So that was a nice trade for me because I was only trading for an hour or so. So with these, all the things I explained to you today, I personally use myself. And if you're interested in getting onto that consistency, I urge you to take advantage of this great discount before we move on to another package. All right, now we have about 15 minutes or so, 10 or 15 minutes left. I want to answer any questions. Probably the most common question I get, so I'll answer this right off the bat in case someone asks, is this being recorded? Yes, we record all of our presentations and webinars. So if you want to see a recording of this, if you look in your chat box, you'll see our email and our phone number. Once again, you can contact us and we'll send you a link to this, to the recording. But once again, don't take too much time if you're really interested in taking advantage of this great deal, because we're not going to run that special that much longer. Let's see, Steve. John asks, Steve, does your pet D indicator run on NinjaTrader? Yes, it does. In fact, John, I'll tell you, it runs on TradeStation, NinjaTrader, and also on Metastock and on MT4. So those are the programs it runs on. Now, I see here that Hemant, our great student in India, may have had some trouble right off the bat with some of the add-ons for his Metastock version, but we're trying to put an end to that and trying to get that resolved. But if you have any other versions, I believe it does work fine. So we want to thank you, Hemant, and for your patience and having us put it together. But we realize, you know, we're on the other side of the planet, and it's difficult sometimes for us to get tech support working great. But hopefully, you're up and running now. Stephanie asks, does it run on Thinkorswim platform? I believe, you know, Stephanie, I'm not sure, but I believe they are making plans for it to be on Thinkorswim, or there's a way to have it run. I would contact one of our trading consultants and ask them that to get probably a more qualified answer. I mostly do all of my trading on Metastock and on TradeStation, so I know it works perfectly on those, but I currently am not using Thinkorswim, but I know a lot of people have requested that, and I know we made changes for that. So pretty sure it should happen. And yes, Anthony, it does work with the MT4. Maria asked, I missed the first part, and where can I hear the recorded copy? Maria, once again, just if you see the information here in front of you, you can call or email, and they'll send you a link to the recording of this. Let's see, the next question is, can we use the indicator to scan intraday and end of day? Yes, I don't know which indicator you're talking about, if you're talking about the PET-D tool or if you're talking about the strategy number 4, but each of those you can, yes, you can scan. It works on, you can look at those and you'll get signals intraday as well. So it's a great tool, and you'll be able to see them as they appear in real time. In fact, I use both of them intraday, and I scan them with both of them, so it's a great way to trade. Gary asks, does this work on 1 and 2 minute bars or on Renko bars? Hi, Gary. I know it works on 1 and 2 minute bars, but I'm not sure if it works that well on Renko, because Renko kind of it stops itself out. Renko is, for those of you who aren't familiar with Renko charts, they're constructed a different way, and I won't really get into the format and all the different rules of how in which Renko charts are formulated. But because of the way they are, they're more like point and figure charts, and they kind of take away the issues of trend that the PET-D looks for. So because of that, I'm not sure the PET-D works that great, but it works great on 1 and 2 minute bars. I was using those today. In fact, I was looking at a 2 minute bar, and we had some fantastic signals on the PET-D. So it all depends what type of trader you are. I know a lot of people like to only look at daily bars. Others will not look at anything higher than a 10-minute bar. That's okay. Whatever makes you feel the most comfortable in your trading is the perfect time frame for you. That's why that we say we don't teach systems, we teach strategies, because we can mold and fit these strategies to meet your needs. With systems, you have to trade and you have to do the same rules each and every time the same way, regardless of the market environments, regardless of what's happening in the world. You have to do the same thing each and every day because it's a system. Strategies are different. You have about 25 to 30% allotted for discretion or insight. So we teach you all about this in our courses. Stephanie asks, how many copies we are allowed to download on my computer? That's a great question, Stephanie. I'm not really sure. I would say contact our trading consultants. I've never done it before. I just work out of one computer myself. I know, you should be able to be able to do that, but I would just check with us to make sure. Call our trading consultants, and they'll be able to answer that for you. Kathleen asks, does it matter if you use the EMA, which is the exponential moving average, or the simple moving average? Hi, Kathleen. This is a very common question. It really doesn't matter because there's nothing magic about the simple moving average, as well as nothing magic about that number 50. The main thing I want to really, have you concerned with is to ask yourself, where is price in relation to that? So if price is above, even if you're using an exponential moving average, you should only look to go long, because most people lose when they're out of sync with this process. If you go back and look at your last 10, 20 losing trades, I can almost guarantee you it's because you're out of sync. You're shorting above the 50 period and you're buying below. So over time, as I stated, you will be out of sync. You will lose this consistency in your trading if you trade that way. So we just want you to be in sync with the overall trading. Now, if you feel more comfortable looking at a 45 period exponential moving average, that's okay. I would keep it close to the 50 or 55 level, because that seems to work well in all time frames. We don't want to go that low to a 20 period or that high to a 200 period. We want to keep it somewhere in the middle so that we can encompass all time frames in all directions, okay? So it's really not as important what the number is, and it's not as important what type of moving average. It's more the concept that I want you to understand and implement. Okay, hi Hemeth. He's asking, I use PET-D for the Indian market. It is working well, but what is the use of the 50 period simple moving average? I admit it or not? This is a great question. See, a lot of people will say, well, if we have the PET-D as a short-term tool, why do I need to know the 50 period? Because the 50 period gives you the overall trend. Okay, if we're above the 50, we know that the overall trend is up. The PET-D gives you the short term, the ups and downs while we're in that overall uptrend. So if you want to be more conservative, yes, I would use both the 50 and the PET-D. That's what I use myself. Now, I know a lot of our students say, Steve, I'm a very short-term trader. I just scalp. I'm in and out very quickly. So I only need to use the PET-D. I found out that that works best for me. That's fine, okay? You're still in sync with the trend, but you're in sync with the short-term trend. So that's okay. So there's really no one right answer, Hannah. You can use either or both. It doesn't matter. It just depends what type of trader you are. If you want to have the overall sync of the market, then use both. If you only want to be trading short-term and very short-term trades, then just use the PET-D, okay? I hope that answers your question. Bob asks, what time frames do I trade on? Unfortunately, Bob, the time frames I'm allowed to trade are due to my schedule. As of today, today was a very busy day. I had to formulate this presentation with new slides, as well as I had to do some other some work for the company, and that takes a lot out of my time frame for trading. So therefore, I have to go to a smaller time frame. In other words, I can't look for signals on a daily or even an hourly type of time frame because I know I don't have that much time to monitor it. So in days and situations like this, I'm looking at, let's say, a 5-minute or even a 1,000 tick bar chart. Whereas other days where my schedule is much more free and I don't have to do any presentations or phone calls, well, then I'll maybe looking at daily bars or 4-hour charts, things of that nature. So remember, though, there is no one right answer. The only right answer is the time frame that works best for you, where you feel the most comfortable. I can tell you my perfect time frame, and then you can go trade it and lose money, and vice versa. Why? Because you'll be out of sync with your niche. Remember, you have to become a part of the process, and the way to do that is not to rely on an outside source for your trading decisions. I said that in the very first 2 minutes of this presentation. Whether that be what they tell you what to buy or sell, or whether that be what the best time frame is. It's up to you to decide what the best time frame is. I want you to become a part of the process, okay? I hope that answers your question. Steve asked, does the PET D work on candlestick? Yes, in fact, I showed you a couple of examples with candlesticks. I showed you those currency pairs where worked on the euro yen and some other examples. So yes, I use it on candlesticks, and I use it all the time with the PET D. In fact, I use the PET D for everything. That's one thing I can tell you. It's such a great tool. It really helps a lot. Okay. Gary asks, is there a free trial? No, Gary, I'm sorry there isn't, because first of all, people can try to reverse engineer it, and then also we've had trouble in the past with people trying to sell our products on eBay, and you know, once they get them, or trying to upload them onto their computer. So we don't give out free trials. Plus, what you're getting with all of this is 37 plus years of trading experience, of learning, of going through everything, and we're melding it down to really shorten your learning curve. So really our guarantee and our free trial is in our integrity and on our honesty, and when we're trying to give you a really good product. Now, I understand sometimes it can be scary, or sometimes you feel, well, how do I know that this is going to be valid? Do a Google search on Specialist Trading or on myself, and you'll see that there aren't a lot of people, not that many, I don't think any at all, complaining about what we do at Specialist Trading. Most of the people are satisfied. In the very least, they've gotten some great education to help them along the trading way. Okay? Let's see here. Stephanie asks, what is the monthly payment for the course? Well, the great thing, Stephanie, is that you can work that together to meet your needs with our trading consultants. So it all depends on how much you can put up and how much what works best. So we work with you on that. You know, we're not going to say where someone has to pay the same regardless of the payment. This is something that we'll work with you that hopefully that will meet your needs. Okay, so give our trading consultants a call and they'll be able to work with you. And include, once you become a member, you know, as I said, my schedule is very busy today. But when my schedule is slower, I answer your emails right away. Most of the emails I got today, I probably won't be able to answer until tomorrow because of the scheduling. But you know, everything we feel proud of that we get back to all of our students and members within 24 hours. So this is something you're in constant contact with us, and we're doing our best to make sure that you are up to speed and understand the trading courses. Okay. Does it work on range bars? Yes, it does. In fact, it works very well on range bars. I've been currently experimenting with it on a few range bars for the E-mini, and I've seen some really nice signals yet, but I still want to experiment a little bit more. But yes, it does work on range bars. Okay. Just time for a few more questions. Let's see here. I'm not sure I understand Hamid's next question. Once again, is this being recorded? Yes, it is. And see, I'm sorry, I'm reading one of the emails here, and Hamid, from our student from India, says he's purchased 3 of our courses, and he hopes to become a perfect trader. Well, remember, there's no such thing as perfect, Hamid. It's just, you just have to follow the rules that you set for yourself. But otherwise, the PET D is enough. Yes, the PET D is a very good tool. I would be, once again, the PET D is something I think that everyone should have, in my opinion, because it really gets you in sync with the short term. He's also asking in manual strategies number 5, 6, and 7, what is the best in my opinion? Well, Hamid, why don't you send me a personal email, because I'd really like just to talk about what we're talking about here today in the course, so that we don't distract from what people want to learn today. And I'll try to answer that tomorrow if you send me an email, okay? Because we have a number of other strategies. We have upwards of 10 different strategies for all the different markets, for Forex, currency, and for stocks. And all of them are designed to trade those markets different ways, short term, longer term, intraday. So I can go into detail about those. It would just take a lot more time to go, but they're all great strategies, okay? The main thing is that the PET D will work with any strategy. It's a great filter to tell you if you're in sync with the short term, and this doesn't mean it has to be one of my strategies. Let's say you're fairly comfortable with something you've been trading, maybe it's something you devised or maybe you got it from another educator, but it's just not great, but it's okay. Well, I'm sure if you add the PET D, you'll increase your odds for success because it'll act as a filter telling you when a signal is in sync. And so that way you'll really feel more confident about taking those signals the way I showed you in some of the examples. Now, strategy number 4 in it by itself is a great consistent strategy already. I used to trade it without the PET D, and I did fine. And now with the PET D, it helps even more. So it's a great technique as well to trade. It's probably our most popular strategy to date. Okay. Gary asks, can you just buy the PET D? Yes, we just give you this combo so that you can take advantage of both these great things. But sure, we're not going to say you can't. Once again, I would call the trading consultant and ask if there are any particular specials with the PET D. I know the current special they're promoting now, Pro Trader Strategies, that is, they're promoting is this combo. So you have to talk with them, but I'm sure they can work with you. Remember, we're traders first, and we're open to working with you so that you can get on that road to consistency, okay? All right, as we conclude here, I want to thank you so much for attending. Remember, once again, if you have any more questions, just contact us with the information provided in front of you on the screen. You can call us at that number, or you can email us, and we'll get back to you as soon as possible. But remember, if you do want to take advantage of that 2-for-1 combo with any type of payment plan, I would really suggest contacting them in the next couple of days because it's only going to run until we go on to the next promotion. Okay, as I say, we have a number of strategies and techniques, as you've seen, and so we will move on to something other than this in our next presentation. So this is a great deal. If you're interested in this, if you're interested in getting it in sync and taking your trading to the next level, I really highly suggest you take advantage of this special because these are things I say from the bottom of my heart that I use each and every day. Okay, I want to thank you so much for attending, and I look forward to all of you becoming members of Specialist Trading and becoming my students. Thank you so much for attending. I shall see you next time. Bye-bye.